Good morning, good afternoon, good evening, wherever you are in the world. I'm Nicolas Véron. It's my pleasure to introduce this new session of the Financial Statement Series at the Peterson Institute for International Economics. And today we will once again talk about Ukraine. The war goes on tragically for now almost 2.5 years. Ukraine remains resilient, and we'll talk about the financial aspects of it. So, financial position of Ukraine, I couldn't think of better speakers than Maria Repko and Elina Ribakova. Maria Repko studied management at the Kyiv National Economics University and then finance at the Ukrainian Institute for Stock Market Development. She graduated in 2005, and she started a career in the financial sector as a fixed income analyst at Ukrsib Bank, then Troika Dialogue, very well-known outfits in Ukraine, then at Phoenix Capital Phoenix Capital Management, then again at Troika Dialogue in the early 2010s, then Empire State Capital Partners, and also as head of research of Foxtrot, a local major company. And in 2015, Maria joined the Center for Economic Strategy, one of the main national think tanks in Kyiv, where she's been ever since the deputy executive director. She's involved in a lot of the policy debates about economic matters in Kyiv, and is joining us, of course, from Kyiv under the conditions of the ongoing war. So thank you particularly, Maria, for being with us today. Elina Ribakova studied at the Stockholm School of Economics in Riga, then at the University of Warwick, where she graduated in economics in 1999. She was also a consultant for the World Bank, and then she moved to the IMF, where she stayed from 1999 to 2008. She then had a decade in the financial sector at Citigroup, at Aviantum Investment Management, at Pioneer Investments, at Deutsche Bank, between London and Moscow. She was in 2019 the Deputy Chief Economist of the Institute of International Finance in Washington, D.C. And last year, she moved on to working for the Kyiv School of Economics, which is another major player of the policy debates in Kyiv and Ukraine, but also at Bruegel in Brussels and at the Peterson Institute in Washington, D.C. So we're colleagues on both sides of the Atlantic, Elina. And thanks again also for being with us today. I should add that Elina has worked with the London School of Economics, with the Center for New American Security, with the Open Society Foundations. I'm probably forgetting a number of important organizations, but just to say that she's been active in many debates about emerging markets, about Russia, about Ukraine, and the post-communist transitions. So with that, Maria, over to you.
Yeah, thank you very much, Nicolas, for such a warm introduction. And I'm really happy to share the floor with Elina, whose work I know and admire for years. And thank you to all listeners who joined the discussion today. So giving you probably the small update on the Ukraine's economic stance at the moment and most pressing issues. We all know that it would be likely the public finance. So if you allow me to start from the beginning, after the war started, Ukraine has lost about 1/3 of its GDP. Not only the assets were destroyed, but also a lot of people flew Ukraine, and therefore we had a huge economic downturn. After that, in 2023, the economy actually grew from this very low baseline by over 5% per year. That was the real GDP growth. That was a rebound, which we all know is praised as Ukraine's resilience, alongside the banking system stability and the people who are staying at their jobs and are providing services to Ukrainians. However, just yesterday, I hosted the webinar on the 2024 economic forecast by the most prominent macroeconomic analysts from Ukraine and from abroad as well. And we reached reached the conclusion during this event that the growth in 2024 and 2025 might be really clouded by several factors, and I will elaborate on them now. So just today, recently, the Держстат, that's Ukrainian Statistics Agency, they issued the GDP numbers for the first quarter of 2024, and it was stunning 6.5% rebound. This is great, and this great result was achieved due to the resilience of not only the people but also the Ukrainian army, who hold their lines and did not allow for the further destructions. But unfortunately, we know that this is not the case anymore with the shelling of energy infrastructure, with the heavy destruction of the city of Kharkiv that was just recently conducted and continued. We cannot expect that this rebound will last for long. Our experts, the macroeconomic forecasters, their baseline for the 2024 GDP growth is at 3.5% per annum for the real GDP figure, and for the inflation it's 7.5. On total, this forecast is not including the recent risks which became really prominent. The first of them, as I mentioned, was the destruction of energy assets. Without the anti-aircraft defense, Ukraine's energy system was actually has lost about 80% of its capacity in terms of the thermal power generation. I think 70 or so of the hydropower generation, and the nuclear power stations remains the only actually and probably the last resort for the Ukrainian businesses and people to get their electricity. There are a huge number of blackouts now in Ukrainian cities. And of course, Ukrainian businesses cannot work as they worked before these blackouts. So probably we will not see this resilience praised and actually very impressive for long anymore if we do not get the necessary military aid, which is probably coming, but not that fast as all of us would like to see. For the coming to the fiscal side of the things, the IMF forecasts about $43 billion of the financing needs for Ukrainian fiscal needs for 2024. This figure could increase specifically because of these risks to the macroeconomic growth that I mentioned. If the GDP growth will not be that strong, so probably we will see much less of the budget revenues. We will see maybe higher inflation, and the need will be growing because of the need to spend money on restoration and on accommodating more refugees and more internally displaced people. So we see that the resilience is still here, but it is fragile. The growth is here, but it is subject to numerous risks, and really a lot depends on the international community efforts and on the regular and actually credible foreign aid, which actually we have saw this year that it is not given. It could not be taken for granted, as numerous problems with this financial aid as well as the military aid could arise. And the more problematic it is, the more valuable is each partner for us. And I want to thank all of you who support Ukraine with the delivery of financial or military aid. So just to sum things up, although it has become customary in the public debate to applaud for this resilience amid hardship and so on, this is far from infinite. The resources are really stretched very far, not only in terms of energy, but also in terms of people. Men are being drafted and people are fleeing the industrially developed regions, so there is no one left who can work in the plant, factories, and the lack of human capital is now one of the biggest problems, biggest issues for Ukrainian businesses, according to different surveys. So the phrase support Ukraine for as long as it takes could vary quickly turn into support Ukraine while it still has some people left. And this is something which might sound bitter, but this is true. And that's why we try to advocate for increased military support, because even in economic terms, every economist I know in Ukraine starts every discussion with the military support nowadays. Mobilization has drained the key personnel, energy system lacks spare parts, front line is gradually moving westwards. This is the picture that we all face. And if we look at the basically the response of Ukraine to this military aggression, what we could see is that at the beginning of the war in 2022, it has increased the military expenditures almost tenfold, from like $200 to $400 million per month to approximately $4 to $5 billion per month. But this is not enough, because if we look at the annual military spending of Russia, they are foreseen at the level of 143, if I remember the number correctly, for the next year, while Ukraine simply cannot afford that. Ukraine is funding its military and defense effort solely by its own budget revenues, which it can take from the businesses, from population, from taxes, from the state-owned companies. And this number is limited to probably $70 billion per year, and not more. All the rest is funded by the partners who provide military aid in kind. So probably this would be my first point, that Ukraine really needs how to put it, the West and the partners to reconsider the financial terms and conditions of the help, and in particular, how and which resources could be directed into purchasing the weapons and all the military related items from Ukrainian producers, because they still have some spare capacity, while in the West there is a huge line for everything, starting from the machinery and to the shells. So that would be probably the first thing which I would like to highlight. Second thing is how to possibly increase and maybe outmatch the Russia's funding for the war efforts. And here we all understand that there are numerous controversial issues, starting from the taxpayers' money in the West to using of the Russian assets, which are now frozen in Euroclear in Belgium and in the other depositories in the other countries. All of these should be considered, and really quickly. The speed is of the essence at the moment, and I would love everyone to just embrace the fact that speed is now crucial. And even if this decision, even if this design of the action is not optimal, now all we need is for it to be fast and to be really massive. Because Russian war efforts are massive, and to outmatch it, the particular amount is needed. And probably last but not the least, we very much appreciate the efforts of the international community directed into coordination. There is this multi-agency donor coordination platform that has been put together and working towards making this financial aid to Ukraine better and probably more efficient. We would love to see these efforts, even the coordination efforts, even more elevated in terms of military aid, financial aid, and the aid for the reconstruction and recovery. I would probably stop here and give the floor to you back, Nicolas.
Thank you, Maria. That was fantastic. Elina.
Thank you so much. I just want to focus on a couple of issues because Maria gave such a comprehensive overview, and I want to leave space for the discussion. I think the first issue that I would like to flag is the energy needs in Ukraine for this year and for this rest of the year and the winter in particular. we have all done wonderful forecasts, and Maria's team is doing fantastic forecasts, and also sort of comparing and coordinating forecasts of others. We're working on it at Kyiv School of Economics, but our forecasts will change dramatically if this situation is allowed to continue with the energy damage to the energy infrastructure. As Nicola also has noticed, because he visited Kyiv recently as well, we do have rolling blockouts already in June. There are different estimates of the damage done to electricity capacity, energy capacity in Ukraine. Kyiv School of Economics have published a report recently on the damages, but it almost needs to be updated regularly. The latest came in June, was the end of May data, but there is a change. It's almost daily. So there are estimates of almost half or even more of the energy producing capacity that has been lost. And of course, for smaller businesses and for some of the private residences, there are generators. But for larger businesses, of course, it will take time to transition. And in some cases, generators are not exactly a viable option for a very large enterprise. So this is something that could affect dramatically our growth forecast. We have the growth forecast, depending on institution you look at, ranging, we looked at 3.5%. We've seen institutions do 4%, 4.5%, even to 2% this year. I think those numbers would have to be revised, I would say even potentially dramatically, if we do not come together and help Ukraine with improving energy capacity from, including through European support, including from Germany and other partners. So I think this is probably the first one. The second one is, as this issue sort of highlights, it's hard to think about needs sort of separately, the military and the financial sector and the fiscal needs, right? We estimate fiscal needs this year, this coming year in 2025 of about 30 billion. But again, if there is a substantial damage to energy, for example, then there is a reduction in growth. It will have spillovers on the ability to generate tax revenues. And of course, then it opens up a potentially bigger fiscal gap in 2025. So the gap of 30 billion assumes basically it's a pure gap. There is some financing that will continue. We know that European Union, the existing program will continue. We have the IMF program, so some of it will be filled, but nonetheless, there is still a substantial leftover. And this discussion about the 50 billion, which is still the modalities of which are still highly uncertain, but that could be an important contributor to closing this fiscal gap in the next year. And that sort of, I want to wrap up with that, is that it is very important that we're finding ways to support Ukraine militarily, but also with the direct financing support, already now thinking about 25 or potentially beyond. And I know that, we will hopefully soon know the modalities of this 50 billion. And also hope that it doesn't prevent Ukrainian authorities or anybody from accessing the underlying 300 billion. Of course, we can have it. We had a wonderful discussion on that at the National Bank of Ukraine conference, annual research conference, the first conference since before COVID, happening in place in Kyiv, and enjoying wonderful weather and food and the concert. So we had a discussion on that. But again, we can't think that, look, the gap for 24 is closed and we can relax. No, we need to think about 25 as well. And then finally, we need to think about the new economy. We have, again, run one of the research papers that came out from the working group helping Ukrainian authorities to think about the economy is sort of Ukraine is not just territory. It is lively centers, it's lively business centers, communities. So thinking about the cluster kind of economy where we protect economic clusters, physical clusters, and that allows for more investment into those areas and potentially also export into EU and other countries. So again, merging this military support with the economic support is critical, and thinking creatively differently about this, sort of having regional clusters or city clusters, and at the same time potentially doubling down on the electricity and making it more spread out, sort of almost war or aggression proofing Ukrainian economy. So now I'll stop here. Thank you.
Thank you so much, Elina. And indeed, as you mentioned, both of us were last week in Kyiv together with our colleague Jacob Kierkegaard for the annual research conference of the National Bank of Ukraine. And even so, Kyiv is comparatively protected, including from missile aggression and privilege in many ways. It's humbling to be there and to see the resistance and resilience of everybody in Ukraine. Maria, I want to talk about something that is, in a way, the dogs that didn't work right, which is financial stability. I mean, we had a session early in the war with a former governor of the National Bank, Valeria Hontareva, and we talked about that. But it's actually quite remarkable that the banking sector has been very stable, has operated very smoothly. Should we not worry at all about the banking sector, or what if we should worry? What would you flag as vulnerabilities or uncertainties?
Yes, actually, the banking sector stability was one of the big achievements of the regulators of that time. But also, I would put it like that. We were very lucky to have COVID, which has trained us and obviously has trained the banks how to work remotely, how to make all the processes work smoothly offline and online as well. So this was a huge help to all of us, which is, paradoxically led the banks to withstand these first days of the war and go through it as well. So what the National Bank, the Central Bank of Ukraine, the regulator did is was actually remarkable. They allowed for the different relaxation of the normatives under which the banking system was functioning, including the NPLs, non-performing loans, which means the bad credits, and the capitalization, and it gave them waiver to several other regulations, and then gradually put it all back when the banks found themselves in a position when they could actually cope with the situation. Nowadays, the liquidity and the capitalization, both normatives, very far in the positive side, very far from the from what is being considered normal and safe. So the banking system is overly liquid, and the capitalization ratios are really huge. But this was probably the two-sided coin, because this situation, this stabilization was achieved during the period of a very high interest rate. The National Bank of Ukraine, because of it was trying to fight the inflation, it has increased the base interest rate, and the banks were really enjoying the opportunity to invest their liquidity into the deposit certificates and the government bonds at a very high interest rates, getting a lot of profits. And these profits were actually recently taxed by this windfall profit tax introduced by the Verkhovna Rada, the Ukrainian parliament. So yes, answering your question in short, for now, the system is stable. What are the risks for the system? The first and foremost, of course, this is the continuation of the aggression. The banks have a lot of assets in the eastern Ukraine. The most industrialized parts of Ukraine were Kharkiv, Dnipro, Zaporizhia region, which are currently under the attack. And if these attacks become more severe, obviously there will be the damage to the quality of the banking loan portfolios in making it simple. No one will repay the debt back if their assets in these territories are destroyed, or the business just have no business anymore, and obviously no funds to repay the banking loan. This would be bad for the banking system, for the banking sector. However, the capitalization buffers are currently enough, and we still hope that we will be able to at least hold the aggressor, or if the international community would be so kind to provide Ukraine with the weapons and with the permit to use these weapons in the territory of Russia, we will be able to fight back.
Now, on this issue of financial stability, anything you would like to add?
I think I would just add the importance of external funding for financial stability. We had the critical issue in the beginning of the war, when naturally, when the country's military expenditure pretty much nearly doubled, country that was not preparing for this kind of full-scale war and defending itself, then the domestic capacity to raise revenues quickly gets exhausted. So we're almost having two budgets. One is the domestically financed budget, and I think authorities have done a lot of efforts of trying to squeeze out places where you can to support the war effort. And then you have the second budget, which is a military budget. And in the first months of the war, we had a situation of incredible monetary financing of the fiscal, just because there was no other option. There was also talk of sort of some negotiations going on with the IMF. IMF made an extraordinary effort and provided the funding eventually, then European Union program as well. But because of that time gap, central bank was forced to provide monetary financing to the budget, and that carried substantial financial stability risk. As you saw, the parallel exchange rate emerged. The central bank at the beginning of the war was forced to go sort of abandon inflation target and go for exchange rate as the anchor, as the nominal anchor. And of course, that creates substantial financial stability risks for the system. There was an emergency measure. It was needed at the time of the war, but together with the monetary finances, that creates sort of like a perfect opportunity for a perfect storm, where in addition to the war, you're going to have a full-fledged balance of payments crisis. Fortunately, we could avoid that situation. But of course, every time when we talk about the delays of external funding, one very quickly ends up with the emergency scenario where the central bank would have to buy this government paper again. Of course, there are still state-controlled banks. One could try to lean on some of the banks, whether it's private or public. But again, it's sort of, what is it? I forgot the terminology. Basically, it will not be a volunteer financing of the budget. It will be oh God, financial repression. There we go. It will be between the financial repression and the monetary financing. So again, we'll go back to realistic assessment of the financing needs of the government and the timed provision of the external support.
But
Yeah,
go ahead, Maria.
Yeah, can I just add a little bit to what Elina just said? That's very true. And the concept of the budget, it actually is the reality in which Ukraine lives for 2 years already, and most probably this third year as well. We have recently issued the paper on analysis, the 2023 budget, and it shows that it is actually divided 50-50, and very interesting numbers. The expenditures for the war almost equal the revenues which are being sourced domestically. It's approximately $70 billion. And all the rest of the expenditures for all the social needs, for the schools, for the hospitals, for whatever you can choose from, it is being funded from the donors' aid. And of course, obviously, this is the most important factor of Ukraine's survival at the moment.
Exactly, but here, am I wrong that there are some good news, right? Because the Ukraine facilities that the EU decided early this year is going to spend, 16 to 20 billion this year, which is more than initially planned, but that means they still have 30 billion in store, which is probably going to be enough to cover 2025 at least. And on top of that, we have the 50 billion from the G7, which is, as you said, still under consideration, but probably is going to happen one way or another before the end of the year. We can discuss the details, but I think the headline announcement has been made, and that commitment will be honored because it depends primarily on the EU, and the EU is probably going to deliver on it, no matter what happens in the US election. So if you take all that together, 50 plus 30, that's more than 80 billion of external assistance, which is certain or near certain. That gives Ukraine about a 2-year perspective. If I get the orders of magnitude right, that, what you said, Maria, of, needing 40 billion a year or so to get the public services ongoing. What am I missing? What are the downside risks?
Probably here will be several technicalities, and I ask you to bear with me now. Last year, 2023, the factual financing needs of Ukraine's budget was at $60 billion, 60, right? Then every foreign aid planned or projected or discussed via this multi-agency donor coordination platform, it was based on the IMF's forecasts and scenarios, as Ukraine is in this IMF program's umbrella. And we know that the assumption that the war will end, it is there in the IMF's forecast, the medium-term forecasts, and as far as I remember, it was the end of 2024 or the mid of 2024. Probably, and unlucky for us, we don't have enough means to end this war with Ukraine's victory in right. So probably it will last the next year. But as I already said, the forecasts of the financing needs of Ukraine, they were based on this scenario that the war will be over. No one could, at the time when these forecasts were made, no one could expect that it would be prolonged and it would be that severe. So it's all understandable. But we also have to understand that there is no possible reason for the decline of the financing needs if the situation with the war does not change. So the decline from 60 billion in 2023 to, you mentioned 30 billion in 2025 is just not feasible now, because probably this forecast will be revised. This is the first point. And the second point, again, coming back to the need of more resources, Ukraine's human capacities are strained. Ukraine's energy capacities are strained. And the idea that we will be still able to go like we are doing it now for 2 more years, and this is actually the equilibrium, I think this idea bears the risk that this equilibrium could just drop, not in favor of Ukraine because of the other factors. So I would say that this 50 billion you mentioned and resources, probably I would consider directing them to the war effort, to the defense effort, and to getting Russia out of Ukraine as soon as possible. And not to, prolong this continuation of the war and try to work for the faster victory.
So, Elina, considering the Ukraine facility, other commitments, and assuming the G7 delivers on the 50 billion before the end of the year, where do you think that gets Ukraine in terms of its external financial needs? Does it cover all of 25? Does it go beyond 25? What's your assessment?
So in the most optimistic scenario, it does cover all of 25 and beyond. I think what we see in the program forecasts of both the IMF and to an extent the European Union and sometimes other donors is that the assumption regarding the end of the war. It is sort of...
And that assumption, we know they have to make it for technical reasons, but it's not credible. So it's not really a basis for... It's not a basis for decision. So my question is not about what the IMF is writing in their, board papers. It's really about your assessment of what will actually be needed in a plausible scenario of war continuation, sadly.
Exactly. And that's why our gaps are bigger than whatever the IMF is showing in their forecast, because they assume end of 24, which is indeed unrealistic. We assume end of 25 because we also need to make some sort of an assumption. And with that assumption, what Maria was also talking about 40 billion per year is sufficient. And it's also important that ongoing cooperation continues between European Union, Ukrainian and US militaries. Because the problem with the supplemental budget in the US was not just about the financing, but it was also inability of any coordination or discussions and any decision-making by Ukrainian army on their strategic priorities, because they had no idea what physical equipment they will be able to count on. And I think that also was provided an important setback. So it's again, not just about finance, but coordination and planning.
Of course, I'm inclined to try to restrict the discussion to the non-military aspects because I don't feel able to deal with the military stuff. But I think Maria was right to say that boundary is blurred at this point, and it's impossible to discuss about the financial balances or prospects without taking in the military dimension. So you're right to remind us of that. Maria, there's a lot of discussion about private sector involvement and the restructuring of the private sector debt of Ukraine. This is topical right now. There was a round of discussions that didn't really come to fruition. Can you give us a picture of both what's the current status of that conversation with private sector lenders to Ukraine, and also how important it is in the bigger picture?
Yes, I'm afraid that I cannot give you the slightest details, the smallest details, but the general willingness to come to some compromise is there, and we see that. But however, the point of view of the government and of the creditors are pretty different at the moment. So the government wants to make the bigger write-offs of the face value of the bonds, while the bondholders, they hope for the smaller write-offs. And also the government would like to pay smaller coupon, which is obvious in terms of war, the obvious willingness to limit its expenditures, the current expenditures, while the bondholders are really interested in getting at least something after the 2 years of patient standstill and waiting for the government to suggest something. So the middle ground is not quite there yet, I would say. And but I do hope that till the August, when the standstill comes to an end, some compromise will be found. And actually, one news that came out, I think yesterday or the day before yesterday, that Ghana, the Republic of Ghana, it has recently restructured its debt, achieving, they don't have war actually, but they have pretty drastic economic conditions. They achieved a huge write-off in negotiations with the creditors. So probably Ghana's experience and example could help Ukrainian government to strengthen its own position in negotiating with the creditors the new terms and conditions of the loan. So negotiations are super heated. We know that some compromise should be achieved, and I think both parties know that. So we just hope to see it.
In terms of absolute numbers, as opposed to, haircut levels, how much are we talking about? How much would be secured by that debt restructuring?
It's the total number of the face value for the bond issues is approximately $20 to $21 billion. So we are talking about like 25% to 40% of this amount to be written off. So that's not a lot if we are looking at the huge needs which Ukraine faces annually. So probably the fuss is really bigger than the amount which we're talking about, but it is still there and it is still important because when Ukraine will be able after the war to tap the bond market again to finance the recovery, the reconstruction, the economic growth, it would likely need the good relations with the creditors, and these are the guys who were invested in Ukraine for years. These are basically the portfolio managers of hedge funds, pension funds, and so on and so forth. And obviously, to stay in a good faith with them is important to be able to, come back to the market.
Elina, you've dealt with a lot of debt restructuring in your career. Can you give us your take on the current situation of this negotiation, and also maybe walk us through the prospects for debt relief from public sector lenders in the future?
So indeed, as Maria pointed out, we're talking a relatively small amount, an increasingly diminishing amount as a percentage of total debt. We just talked about potential further needs of another 80 billion for the next couple of years. And again, some of it will come as grants, some will come as loans, and then this proportion of old external private sector debt will become even smaller. I also think that we do, as you know, we have a standstill until the summer, until August this year. I personally think it is okay for the authorities to continue negotiating beyond the date of the expiry of the standstill. It is indeed a special situation. I do not think it is something that a broader private sector should look negatively upon. There are also specific challenges related to these negotiations where I think the private sector received a rather generous proposal, decided to go for more, and also there is a very dispersed group of bondholders. It's not like the previous restructuring, which we saw in 2014, where it was a very concentrated ownership and it was easy to get the committee and easy to get an agreement. So the risk here is that even if you do get an agreement now with the smaller group, there is always a chance that somebody else will step in and say, look, I wasn't actually agreeing to this at the time. So it is, I think, given the war, I think it's perfectly legitimate for Ukrainian authorities to be aggressive in terms of their proposal or potentially extend the standstill for another couple of years. At the same time, I think it's very important to be transparent and clear, not to try to be too creative. I think in 2014, partially because of the advice of external advisors, the warrants idea was not necessarily, I think Nicolas is laughing, it was not necessarily the best of interest of Ukraine, because as we know, we oftentimes have this bounce back in the economy after the sharp contraction. So not trying to have maybe a step up clauses or especially not while we expect the war to continue. And at this stage, nobody really knows how long the war is likely to continue. To have a very simple structure, simple offer of the restructuring, and then any conditionality, if at all, comes after the actual end of the war. And I think what is also very problematic in these negotiations is that we have, indeed, public sector might actually have to have its own restructuring. And in old days, we would have the Paris Club and the London Club, so going one after another, so that in the private sector restructuring, you already know the terms for the public sector, and therefore you expect something not worse, or at least actually better than whatever you have done through the public sector restructuring. At this stage, we're sort of having the cart in front of the horse. It is very likely that a few years down the road, with the almost doubling of external debt of Ukraine and the ratio changing unfavorably towards disproportionately foreign exchange borrowing of Ukraine, that we will likely have to have public sector restructuring. And I think behind the closed doors, most of the authorities and the governments do understand that. And effectively, they do, while it is officially loans, they do understand that these loans will be either extended to an extraordinarily long period or will be explicitly converted to grants to be able to give the opportunity for Ukraine to start the recovery and reconstruction process.
So can you remind us, in terms of the public sector lending, what are the amounts we're talking about on paper? And as you rightly said, this is mostly a paper proposition, but on paper, how much is Ukrainian debt to GDP? How much of that is public sector, and how much of the public sector is European?
So to the extent that I will remember on top of my head, I think it's the debt to GDP increased from about 40%, I think, to 75%. And I'm also looking at Maria if she remembers the same, with I think more than 70% already is external FX denominated debt. So all of that increases obviously public sector. I will have a hard time remembering the breakdown. In the beginning, we had more support from the US, and then later we had more support from European authorities. So I will no longer, and of course there are some other countries that have provided the financing. The Ministry of Finance still provides their wonderful monthly bulletin, I think it's monthly, where they give the summary. And of course other institutions like Kyiv Institute also sort of provides the summaries. We do, and I'm sure Maria's center also does. So that's where we are.
Maria, any addition on that?
Probably to add a little bit, in 2019, after the policies on the prudent fiscal finance management, and so on were introduced, Ukraine's debt to GDP was standing below 50%. So that was a very good ratio. Now, again, coming back to the forecasts of the economists, which we were having yesterday, for the 2024, the number is expected below 100% of GDP, but still higher than 90%. So the ratio is growing. If in the beginning of the war we were getting a lot of grants from the US and loans from the European Union and the other partners, now the situation changes, and the grants are less than we would like to see. That's why this 50 billion from the Russian assets front-loaded and provided to Ukraine are really important, not only to be able to get the money, but also to be able not to increase the debt burden. From the point of view of external and domestic, just a quick statistics, I have just opened the file. We have 41 billion domestic state debt in dollars. I mean, it is obviously denominated in both dollars and domestic currency, but the dollar denominated figure. 102 external state debt and approximately 8 billion of the state guaranteed debt, also mostly external, but internal loans as well. So we see that, if before the war we had almost like approximately 50-50 for the public and guaranteed debt to be domestic and external. Now the external state debt is twice and probably more than twice bigger than domestic debt. Of course, that could be expected, and we have to couple with that.
Right. We have a question. By the way, I encourage those who are with us on Zoom to use the Q&A tool. You can ask questions there. I think one of you, Doug, had a hand raised, but it's better to use the Q&A. We have a question from Reinhold Rickes about the evolution of the exchange rate and how you see that going forward. Maria, can you update us on that?
Ukrainian hryvnia, it was just at the beginning of the foreign currency liberalization process when the war has started. And then immediately the rate was fixed at the pretty high level of, as far as I remember, it was 25. At the beginning of the war, and then when the National Bank saw that there is a huge black market for hryvnia at this rate, the official exchange rate peg was moved to 36.6 hryvnia per dollar. From that time and till now, a lot of foreign exchange restrictions were relaxed, and the National Bank has gradually and very carefully, very cautiously moved towards the inflation targeting and like semi-flexible exchange rate again. Now we see the forecasted 40 to 41 hryvnia per dollar exchange rate as of the end of 2020. Which is more or less in line with the expected trade balance, trade gap, current account gap, and the international aid that would be incoming. However, of course, this is all very much dependent on one other assumption, one other crucial factor, which we did not discuss today, but I think that we will touch upon it now, the availability of the seaports. Last year, the availability of the seaports for the external trade was crucial because Russia was not allowing Ukrainian ships out of the Black Sea, and the trade was heavily interrupted. Now we see that it is possible, it is done, it is doable, and Ukrainian companies are using the seaborne ways of logistics to transport their export goods. This concerns agro, but also metals and mining goods. So far, so good, it works. But if we will see some negative developments here, and this is also a very big risk, of course, we will see not only the exchange rate problems, but also the reserves depletion, and probably new financial troubles will await for us.
Now, on the currency situation, any addition?
On the currency situation, I would add that Ukrainian authorities, after 2014 and before this full-scale invasion, have done great progress moving towards inflation targeting. And as you know very well, the IMF originally was very skeptical, and it was almost the other way around. Usually the IMF pushing reforms, while here it was Ukrainian National Bank of Ukraine pushing for reforms and proving themselves that, yes, we can do that. Of course, it's perfectly understandable that we had to stop during the war because collecting inflation was hard, never mind targeting it. Now I think that the situation has stabilized. I think it's important to have the normalization of this regime, especially if sort of, as we have now talked through, the external financing need will be closed, the gap will be closed, will allow for stability in reserves, and then it will allow to have more flexibility on the exchange rate. Close coordination between the Ministry of Finance and the central bank is also very important. We have had period when the hikes in the policy rate were not translated to the Ministry of Finance rates that they were offering on their auctions. And I think, of course, this kind of disconnect is not constructive, although, again, during the war, there can be debate on this issue, but my personal view that this is confusing, not constructive, and destroys the market, and it's therefore not a surprise when then the private sector, well, banks, the private sector, do not participate in the auctions. So I am somewhat, less concerned about the path of the exchange rate. If we continue to, especially this year and next year, if the external financing will be met. So I'm not going to forecast the exchange rate now, but I think between the Black Sea solution for Ukrainian exports and the continued support of the donors, I'm not expecting a return of this very turbulent times that we had in the mid 2022.
Can either of you remind us the trajectory of the reserves in the last, 18 months. I mean, not talking about the troubled times of 2022, but since the beginning of 23, have the reserves been generally, the central bank's reserves been generally increasing, decreasing? What has been the evolution?
This is just what I was going to do now to add on the reserve side. It is now at its maximum because there is a huge inflow of foreign aid as a factor. As you know, we are just now accepting this as a part of our reality, and it influences basically every important indicator in Ukraine's economic life. So, yeah, the reserves are over $50 billion, and this is the record high level for Ukraine, and it is not forecasted to decline again with a lot of ifs. But if the situation continues like it is now and no major event happens, then we will see the reserves at this level more or less. Probably some funds would be spent by the National Bank to support the Ukrainian currency, hryvnia, because there will be the pressure from the trade gap and so on. But yeah, the foreign aid would be to keep it at the safe level.
So we have a question from Doug, which takes us back to the debt restructuring discussion in the context of, current IMF deliberations, which it's an active week for that. And he's asking whether it's plausible to accept, a limited haircut for investors, and adding that, well, there are conditions for the IMF to lend and to have private sector involvement, but also the fact that maybe the investors that will be needed in the future in, post-war reconstruction and so on and so forth, will in any case be different from the investors that have to accept losses now. So, Elina, maybe you can enlighten us on how you see those trade-offs?
Well, first, the IMF, of course, is in a bind, right? Sort of trying to put in something in the forecast now. Again, as we said before, cart in front of the horse. You need to have more clarity on the public sector restructuring, and then you can do private sector restructuring. So the timing of the private sector right now is very unfortunate. Also, I absolutely agree that the type of investor will be different. It will be more venture capital. It will be other kind of sort of FDI and other kind of invest on the immediate reconstruction. There will also be bond investors, but this will be different bond investors. And if anything, the new bond investor would prefer not to have the legacy investors receiving any foreign exchange, right? So everything sort of argues, as an economist, to have more aggressive, if the Ukrainian authorities are forced into restructuring now, to have a much more aggressive restructuring than not, right? Whether I see Doug puts there 0, I do not know if it's indeed has to be 0, but it has to be a very aggressive restructuring or postponement. I personally haven't quite decided. There are pluses and minuses of both, whether you extend it by 2 years. Some say that, look, if in 2 years' time we have the wonderful end of the war, then you will not be able to be as aggressive with these bondholders. But at the same time, we'll also have something on the official sector restructuring as well to guide us for the restructuring with the private sector. So yes, I think it has to be aggressive enough. If there is the end of the war or improvement in the security situation in Ukraine, the macroeconomic situation will speak for itself. And if anything, it will better not to use the money for the legacy bondholders, because there will be new kind of investors coming in. And at the moment, it is also good not to be using the money that could be going to hospitals in Ukraine, financed by European Union or the IMF, to be sending it back to emerging market investors that understand the risky investment they're doing, and we're getting very healthy returns for that.
Very clear. I want us to move on to something, because we only have 5 minutes left, to some things that Maria mentioned, and maybe back to you, Maria, which is a coordination platform, the donor platforms, coordination between donors, also on conditionality. Can you give us a sense of where we are on this? How much has it improved? How much is there still room for improvement? And this issue of donor coordination has major practical implications. So if you could walk us through that.
Indeed, I believe that there is a room for improvement in that. However, the progress is also here. So it should be mentioned that there is a progress in terms of donor coordination, and notably not only from the donor side, but also from the government side. What our government has recently done, they created the so-called reform matrix. And this reform matrix, it contains all the entirety of different donors' conditionalities, starting from the World Bank and the IMF and the European Union, including this European Union accession terms and conditions. And as far as I remember, they ended up with 416, I think, actions that are to be taken within the next year or so. So this is an overwhelming number. And when it was shown to the donors, and all this entirety as one single picture, there were questions. So, okay, maybe we have to coordinate more and not to overwhelm the government with its really strained resources in a wartime with a lot of additional reforms, and probably focus on the most important things and the things which would likely to bring not only hardships as the fiscal austerity and all these, painful but necessary, but also the economic growth. Which of these reforms could be beneficial for the market, for the companies? What can we do to actually make things work for Ukrainian business and economy in the short term, not in the long run? This is probably the question that I would like the donors and the partners to ask themselves and Ukraine, and work towards the achievement of these goals as well. And I see that Elina wants to add on matrix, right? Please.
Nina, if I can add a question to you, you mentioned the fact that the financial assistance has been shifting gradually from the US to the EU. So how does that affect the way conditionality is formulated? Also, of course, I should have started with that today is the day of the opening of accession negotiation to the EU for Ukraine, also for Moldova, which is an important milestone, of course, on the path towards EU membership. How do you see the conditionality discussion evolving over not just the next few months, but the next few years, and the balance, particularly between EU and US and also other donors going forward? I know it's a complicated question, but I would very much like to have your take on that.
So I think the EU has already started working with the authorities closely in terms of discussing conditionality. So there is much less of a come in and give a list approach from the EU relative to potentially sometimes other donors. And it is much more sort of nuanced work. Sometimes they do get carried away, forgetting that Ukraine is a country at war. So you end up with this multitude of reforms that are needed for an accession country, forgetting that this specific accession country is at the moment in the war. So you have sometimes too many, but the discussion has been very close already. So that this matrix is a result of a very nuanced discussion that's been going on for more than, I think, almost a year now, right? So that is, I think, key. With the US, sometimes they interject themselves into the discussion without spending months and months on clarifying and having the back and forth. And I think sometimes it can be productive, oftentimes it can be not as productive. So I think it's very good that European Union is taking more ownership of the process from its side. And I think the accession discussions provide an important anchor and structure around this reform. Again, as long as we don't carry the way with having too many of those reforms.
I was surprised last week in Kyiv by how little the human footprint of the EU is on site. There are very few officials who are permanently there in Kyiv. Is the EU correctly equipped to manage this massive effort? Big amounts, as you said, the need for nuanced understanding of the realities of Ukraine, not be like just too pro-consular. Or does the EU have to completely rethink its setup to be able to, have the operational capability to manage that endeavor?
I think the EU will have to rethink its operational capability, but at the same time, they will have to lean a lot on domestic partners in Ukraine. And they do have domestic partners in Ukraine. The systems for Prozoro and other system for transparent procurement exists in Ukraine.
Prozoro is a procurement platform, right?
Exactly, yeah. And For the projects, there is opportunity to make it in a transparent way. We haven't talked about anti-corruption measures, but this is one of the good anti-corruption measures. Also, we've seen at the URC conference, at the Ukraine Recovery Conference, much more participation from the local government level, not just the central level. And I think that should help as well in terms of not only from EU parachuting things in, but also seeing the response from the ground. So I think it is possible. European Union also, although many of them are not present in Ukraine, they've been traveling frequently, and we know that the Ukrainian authorities have very frequent calls, including us independent think tanks as well, with the EU authorities, who are pretty good experts by now, some of them. I want to leave space for Maria also to make a comment.
Yeah, probably just a short one. I know all of you know about the Ukraine facility, and part of this Ukraine facility is the third pillar of the facility, which is specifically designed to support the capacity of the Ukrainian government in the progress of the EU. But what was not regularly mentioned, that this facility envisages also a substantial increase in the staff of the DGNIR, so that they are able to cope with all these, challenges and so on. And of course, this is a big thing. And I know that they are getting ready. The European bureaucratic machine is already willing and able and capacitated to do something. And this fills me with a lot of optimism that Ukraine will eventually, sooner or later, or rather sooner than later, become a part of the European Union, as Croatia did once, after also the very severe war in its territory, but they managed to do this. So I do hope that together Ukraine and the European Union will achieve this.
That's appropriately steadfast and optimistic note on which to conclude. Unfortunately, we're at the hour. We could continue for a long time, but what you said is important. DGNIR, of course, is the Directorate General for Enlargement at the European Commission, in charge of the relationship with Ukraine. Thank you so much. Thank you, Maria, particularly joining us from Kyiv. Thanks, Elina, for being with us today. The next session will be on July 11. We'll talk about Japan and the structural evolution of the Japanese banking sector. In the meantime, have a great rest of your day, and thanks very much to everybody for participating.
Thank you for having us. Bye.
Thank you.